sovereign wealth funds move more money than most countries' annual budgets combined, and their hidden strategies shape markets worldwide. Stay tuned, because number 1 reveals a power move that almost nobody predicts. Imagine a nation's savings pool quietly financing the roads, ports, and power plants that keep global trade humming. Sovereign wealth funds, especially those from oil-rich countries, allocate billions to infrastructure projects far beyond their borders, from a high-speed rail in Europe to a massive port in Africa. These investments not only generate steady returns, but also lock in long-term economic partnerships, giving the fund-owning country a strategic foothold in critical logistics hubs. Analysts note that such projects often come with favorable financing terms, allowing host nations to accelerate development while the fund secures a reliable income stream. Over the past decade, infrastructure commitments by sovereign funds have grown to an estimated $200 billion, highlighting a shift toward tangible, impact-driven assets that shape the very foundations of global commerce.
Surprisingly, sovereign wealth funds act as silent stabilizers in volatile commodity markets, wielding their massive reserves to smooth price swings that affect everything from fuel costs to food prices. When oil prices plunge, funds like the Abu Dhabi Investment Authority often increase their holdings, providing a floor that helps temper market panic. Conversely, during periods of excess, they may scale back purchases, easing upward pressure. This balancing act, while subtle, can influence global supply chains and national budgets reliant on commodity revenues. Researchers estimate that collective SWF exposure to energy assets exceeds $1 trillion, granting them a quasi-regulatory role without formal policy mandates. By diversifying into metals, agriculture, and renewable energy, these funds further dampen shocks across a broader range of essential goods, underscoring their quiet but potent role in global economic stability.
According to recent reports, sovereign wealth funds have become some of the most aggressive backers of high-growth technology startups, pouring capital into sectors like artificial intelligence, fintech, and biotech. While traditionally associated with long-term, low-risk assets, many funds now allocate a dedicated venture arm that seeks outsized returns and strategic advantage. For instance, the Singaporean Temasek has invested heavily in cloud computing firms, positioning the nation at the forefront of digital transformation. This influx of capital not only fuels innovation, but also grants the fund-owning governments early insight into emerging technologies that could reshape their economies. Analysts suggest that global SWF venture investments now top $50 billion annually, a figure that continues to rise as funds chase the next disruptive breakthrough.
Hidden within their balance sheets, sovereign wealth funds hold staggering amounts of foreign currency reserves, giving them a subtle but powerful lever over exchange rates. By buying or selling large blocks of a currency, they can influence its strength, affecting export competitiveness and inflation in both home and target economies. For example, the Russian National Wealth Fund's adjustments to its euro holdings have been linked to short-term euro-dollar fluctuations. While central banks traditionally manage monetary policy, the sheer size of SWF holdings means their actions can echo across forex markets, sometimes prompting reactions from policymakers seeking to counteract unintended shifts. This dynamic showcases another layer of financial influence that operates largely out of public view.
Behind the scenes, sovereign wealth funds have become some of the most prolific owners of prime real estate across the globe, snapping up office towers, shopping centers, and residential complexes in major cities. Their long-term investment horizon allows them to purchase high-value properties at opportune moments, often during market downturns, and hold them for decades, generating steady rental income and capital appreciation. Notable acquisitions include a portfolio of London office buildings by the Qatar Investment Authority and extensive retail holdings in the United States by the Saudi Public Investment Fund. These moves not only diversify fund assets, but also embed the fund-owning nation into the economic fabric of key urban centers, influencing local markets and urban development trends.
Consider how governments harness sovereign wealth funds as strategic policy instruments, channeling capital to achieve national objectives beyond pure profit. Funds may be directed to support domestic industries, fund social programs, or cushion economies during downturns, effectively acting as a fiscal buffer. For instance, Norway's government pension fund Global has been used to finance sustainable projects aligned with the country's climate goals, while the UAE's sovereign fund supports diversification away from oil dependence. This dual-purpose approach blends financial stewardship with public policy, allowing nations to leverage their accumulated wealth to steer long-term economic trajectories while maintaining investment returns.
In the world of high-stakes finance, sovereign wealth funds excel at diversifying across asset classes, regions, and sectors to mitigate risk and preserve capital for future generations. By spreading investments from equities and bonds to real assets like timber, infrastructure, and even cryptocurrency, they reduce exposure to any single market shock. This risk-aware strategy not only protects the fund's purchasing power against inflation, but also ensures a steady flow of returns even when traditional markets falter. Studies indicate that diversified SWF portfolios have outperformed more concentrated national pension schemes during periods of economic turbulence, highlighting the prudence of a broad investment canvas.
Few people realize that the sheer financial clout of sovereign wealth funds can translate into diplomatic leverage, allowing countries to forge strategic partnerships or gain favorable trade terms. By committing capital to joint ventures or infrastructure projects in another nation, a fund can effectively build economic dependencies that translate into political goodwill. For example, China's sovereign funds have financed key ports in Africa, fostering not only trade routes but also enhancing Beijing's influence in regional politics. This subtle form of soft power underscores how financial muscle can complement traditional diplomatic tools, shaping geopolitical landscapes without overt military or political maneuvers.
Remarkably, sovereign wealth funds have become catalysts for growth in emerging economies, directing billions towards sectors that spur job creation and technological advancement. By investing in renewable energy plants, telecommunications infrastructure, and manufacturing hubs, these funds help bridge development gaps while earning attractive returns. Nations like Saudi Arabia and Qatar have launched multi-billion-dollar initiatives in Southeast Asia and Latin America, funding everything from solar farms to logistics parks. Such investments not only diversify the fund's portfolios, but also accelerate economic modernization in host countries, fostering a cycle of prosperity that benefits both the emerging market and the fund's long-term earnings potential.
Ultimately, the next frontier for sovereign wealth funds lies in embracing transparency, ESG standards, and emerging investment themes such as green technology and digital assets. As global scrutiny intensifies, many funds are publishing detailed annual reports, adopting third-party audits, and aligning with sustainability frameworks to attract responsible investors and maintain legitimacy. Simultaneously, they are exploring frontier assets like blockchain-based securities and climate-focused projects, positioning themselves at the vanguard of financial innovation. This evolution suggests that future SWFs will not only continue to influence markets but will also set new benchmarks for openness and ethical stewardship, reshaping how capital drives the global economy.
We've just peeled back the curtain on how sovereign wealth funds quietly steer infrastructure, commodities, tech, real estate, and even geopolitics, proving they're far more than passive investors. If you enjoyed this deep dive and want to stay ahead of the next financial revelation, hit subscribe. New mind-blowing lists arrive every week. Which of these fund influences caught you off guard? Share your thoughts below, and if you liked the video, give it a thumbs up. Thanks for watching.